don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD, Annabel, and Melissa.
Welcome to the Real Estate Jam podcast. I'm JD, and as always, I am with Annabel and Melissa. And today we have the extreme pleasure of having Miss Kayla Sweeny with us. Kayla is a mortgage loan advisor for Acopia. She is certified to help people in Georgia, Florida, Alabama, Tennessee, and Texas.
Wow.
And she has worked with us on a couple of the things that we've done, and we know she's an expert in the space. So we wanted to bring her on today to kind of give some key insights and details to our listeners. So Kayla, thanks for being with us. We're really excited to have you here.
Yes, thank you guys so much for having me. It's a pleasure.
Awesome. Well, let's just dive right in. Can you tell us a little bit about what you do in your area of expertise?
Yes, so I'm, like JD said, I'm a mortgage loan advisor with Acopia Home Loans. I have been in the mortgage business for a little over 8 years now. I started on the operations side, so I did processing and funding, so I knew the programs really well. And when I was pregnant with my daughter in 2016, I decided to switch over to the sales side just to give me a little bit more freedom to be at home with my children, because I do have a little boy now too. So they stay home with me, and I do as many loans as I can for as many people as I can. And I don't discriminate on loans. So conventional, Fannie Mae, Freddie Mac, FHA, VA, investors, as Melissa is, we've done 3 together, outside of the box type loans, bank statements, just anything. I just love doing what I do, because not only helping people be first-time home buyers start building equity in their own home, but also helping people get investment properties and start building their own wealth.
That's awesome. You're doing a ton.
She's a pro. She can majorly do things outside the box, because there's no way we should have not 1, not 2, and certainly not 3.
Melissa, don't say that. People might be listening, and then they won't give us any more.
I'm actually pretty sure that the last loan Melissa and I did together, they told me through the broker company that was a record for how fast we closed.
Yeah, she did awesome. But I only say she shouldn't have got it just because she's able to get people who don't qualify traditionally, who don't have W-2 incomes, that kind of thing. So that's huge, where a lot of people are, a lot of mortgage, they're not brokers, but what did you call it again?
Lenders.
Okay. Yeah. Would be scared. I meant more of your position.
Yes.
Would be scared to do those kind of things, because you put in a lot of work and then people don't end up qualifying.
Well, I think that's one of the important things that I think we should note to our investors. That primarily that's what's going to be listening to this podcast. But it's super important, if you want to use some sort of conventional financing, to find a mortgage loan advisor that is going to be willing to put the time in to help you find a loan that you qualify for that's not necessarily traditional. A lot of times mortgage brokers, mortgage lenders, they just want the cookie cutter, easy in, easy out. They can funnel through as many loans as they can. And that doesn't work for us as investors, because we don't always have W-2 income to build your loan off of. We might have more than one loan. If we're looking at only Freddie Mae and Fannie Mac, or Fannie Mae, Freddie Mac, whatever, if we're looking at only those type of loans, well, there's a certain number that we can have. And if you've exceeded that loan, you're not able to qualify. Finding an expert in the space is extremely important if you're trying to get that type of financing. and you don't fit the traditional mold of a first-time home buyer or somebody like that. And I think that's where Kayla is able to come in and provide a service to investors that is kind of like a hidden gem with conventional financing.
Definitely.
Yes, very much so.
So can you tell us a little bit, kind of where you started and why you decided to be so, 5 states? That's huge.
Well, I'm originally from Georgia, and I met my husband back in 2014 when I was down here with a friend in Panama City. She was a teacher. She still is a teacher. And we were here for her spring break and met him and hit it off. So a lot of my contacts where I started in the mortgage business was Georgia. So it just made sense, Georgia and Florida for sure. Then a couple of years ago, a friend of mine was moving from Georgia to Alabama for work and called me and said, hey, we're going to move in a couple months. Are you licensed in Alabama? And I said, no, but I can be. So I got licensed there. And then same thing with Tennessee. I have a friend who is, she's a military wife, and her husband got stationed, and he went from Georgia to Tennessee, and he's an Army Ranger. So she said, we got orders. Can you do our loan? I said, not yet, but I can.
Wow.
Give me a little bit, just got to get licensed. And then I also did a second home for a lady who is in Texas that works for a builder in Texas. So I got licensed after talking with her. I got licensed in Texas so that I can help her clients over there as well.
Okay, great. Wow, that's huge. Obviously, our market is Florida, so we're glad that you're working in Florida, certainly. Can you tell us a little bit about some of the unique things that happen in Florida, or the things that are unique to Florida?
Yes, definitely. Especially with investors, one big thing to know going in is a lot of condos in Florida are not Fannie Mae or Freddie Mac warrantable. That just means that they meet specific guidelines for Fannie Mae and Freddie Mac to back that loan. Most of the condos, especially around Panama City, you're going to see it down in Miami too. They call them condotels. They're more of a resort style. They have a front desk. There's different amenities that are great for our area because we're considered a destination area. But for investors, it can be a little bit harder. And mainly as a mortgage loan originator or advisor, you have to be very vigilant on getting with the HOAs and making sure you have all their documentation, because you need budgets and bylaws. You need to see if there's any outstanding litigation, if that outstanding litigation can affect the loan and the ownership of the person purchasing too. So there's a lot of things that go into it. It is a little bit extra work, but the biggest thing is that a lot of times you need more down payment, 25, 30% down on an investment loan on these condotel type loans. A lot of them are going to have higher interest rates as well. So whereas we're seeing a lot of the conventional products in the 3s, maybe even low 3s right now, I had a VA that I locked just yesterday in the 2s. You're not going to see that on your condotel type programs. You're probably going to see more like 5s, maybe 6s, just because they're considered a little bit more risky. So when anybody is looking at investing, especially in condos, I try to keep a list together of what condos can go Fannie Mae warrantable. I'm working on expanding that list. There's only a few on it right now, but that's a big thing, is making sure up front you've either got cash money to put down or you're looking at the condos that fit your parameters. As far as home, a single family residence or a townhome, those are standard. Fannie Mae is fine with those, Freddie Mac. Obviously, as an investor, you can't go FHA or VA, but you do have plenty of programs going 15% down. And when you're talking about half of the amount plus a lower payment, that obviously helps when you're trying to figure out how much income you can get on the property, how much you want to rent it out for, and if you want it to be long-term or short-term.
Absolutely. A lot of the people that we deal with think that, when you think conventional loan, you think of just specifically those FHA type loans, the 3.5% down or whatever it is, or a traditional conventional loan that is based off of your credit score and that kind of stuff. But as Melissa was talking about earlier, you came up with some creative ways or knew about some creative programs. Do you think you could touch on what some of those programs are and what they look like for our investors who may not qualify for a traditional loan?
Yes. So one of the biggest, I guess I'd say easiest of these, Melissa might agree on the very last one we did together, but not the other two, is a bank statement program. What's great about a bank statement program is there's no income docs whatsoever. It is 12 months or 24 months of bank statements. If you have big deposits going in, like with Melissa, we had to show invoices and things where stuff was coming in. So banks make it a whole lot easier nowadays because with checks coming in, you can print those, you have them for a year or more that you can go back, and the bank's going to want all that. They're going to want to know where that money's coming from, but there is no W-2s. There's no tax returns. There's no calculating income after you've written as much off as you can, because we know as self-employed people, that's mostly what everybody wants to do, is have to pay as little in as taxes as possible. So it helps with that too, because otherwise we're talking about amending tax returns to be able to qualify. Again, on that program, it's just like Condotel, it's kind of out of the box. So it is usually going to be a higher interest rate, but it does have it's a lot easier in the sense of, you don't need to go right now and talk to your CPA and figure out how you're going to file taxes for 2020 and 2021 so that you can show enough income to purchase a property.
It was great, just because that's like such a double-edged sword, because you don't want to show that income, like you said, but then you have to if you want to be able to get any mortgages. So, and it was great because they didn't have to factor in the other mortgages that we had. So that was good.
And that's another thing with that type of loan. Anything that is paid by the business. So if your vehicle is paid by the business, if your other properties are paid by the business, anything, your credit cards, your Home Depot bill, your Lowe's bill, all that can be taken out of the debt to income ratios, because that is considered a business expense versus a personal expense.
Yeah, those were great. That was just perfect. So
awesome. Well, unless anybody else had anything on that. Good. So one of the big problems that in the real estate investor industry, you guys kind of have a bad rep of making things difficult, of delaying closings, of all of these typical problems. But what we found is the more organized I am with my personal finances and my personal documents, and if I know where to find all my tax returns and all my income statements and all of that, then it goes a lot smoother. I'm wondering if maybe we can talk about that for a minute. Like if an investor comes to you looking for a loan, could you kind of give us a rundown of what would make that process the smoothest for them? Should that, one of the things that has been recommended to me, and we do use sometimes, and sometimes we don't update it, is to keep a file that has all of those pertinent documents in it and stuff like that. I'm wondering if you have any recommendations on how to make it, how real estate investors can make the whole process faster and easier. Because I know even though you guys catch the bad rap, a lot of times it's because I'm disorganized that stuff drags out.
He's super disorganized.
Well, I could tell you one thing. I've had probably 6 people just this year that can not find their Social Security card. So put your Social Security card somewhere where you can remember where it is. One of the biggest things, though, is just making sure you're on top of stuff. So I don't give out pre-qualifications or pre-approvals without seeing people's information. I need everybody's bank statements. I need their tax returns. I need their pay stubs, W-2s, if they are W-2, 1099s, if they're on fixed income. I want retirement statements, Social Security, you know, all that stuff that factors in. If you've had a divorce, we need a divorce decree. There's tons of people that do not keep that. You can get it for free most of the time from the county that you got divorced in. Thankfully, there's a nice lady at the clerk of courts in Bay County that I can usually just email her and she'll be like, here you go. So I'm glad I have her over there. But little things like that, you know, out of the box stuff. If you have a child support agreement, you weren't married, but you do have a dependent, you know, make sure you know where your child support agreement is, and just keeping all those documents, which I think it's important to have anyways, either somewhere on your computer in a file, or even if you use an external hard drive, just to make sure, even a flash drive, just to make sure you always have that stuff and update it as time goes on. You know, you file your tax returns, you get another one. I have a lot of people too that their address is not always current on their license, which isn't really a huge deal. But if something were to get mailed through the process, you know, you do want to make sure everything matches up. You want to try and have everything as smooth as possible. I run into a lot of times we order what's called tax transcripts, and that's just where we go to the IRS and get what they have on record for your last 2 years at least of tax returns. It's a transcript that gets sent right to us, but often we will get an application that will be, you know, somebody's entire name all spelled out, but then on the tax return, they used a middle initial instead of their whole middle name, and so it gets kicked back to us. Or on their tax return, they put Unit 5, and as they put in the application, it says Apartment 5. And I know that seems so silly, but knowing that stuff up front is big. And also working with an agent to make sure that they are putting your name on a contract the same way as it reads on your tax return, so that your closing documents all match up throughout the whole process is big too. So making sure that you're working with an agent and a lender who can communicate well and make sure they both have your back, that's big too. Is just, of course, having all those files, but trying to work up front to make sure everything matches up along the way.
That's good. That's good information.
Yeah, really good information.
Yeah, I never thought about any of that like that. So that makes total sense.
Yeah, it
Well, I
explains.
try to do it in the background so that you don't have to worry about it.
Well, it explains why we're always getting, you know, an email that, you know, when I get sent an email, then I look at it and it takes me a day to get the stuff together, and then I send it back to you, and it's going to take you a day to get through because we're not your only person. Next thing you know, you're 3 days behind because of this one, you know, your initial wasn't spelled out the right way. And everything just goes so much smoother if you have all of that stuff lined up beforehand. That's really good advice.
I honestly suggest working with someone who's going to get that information before you even start looking, because that can just keep from having those little hiccups along the way. You know, if somebody's already gone through all your stuff, unless there's something random that comes up that they wouldn't have known about, like, you know, something on title on the property that they choose, something like that, that would hold up the process. Other than that, you know, it's good practice to do as much as you can up front before you even go out and start looking, so that, you know, maybe this is a different kind of property. Maybe it looks like a townhouse, but it's actually licensed as a condo. And then you get into the whole condo mix again. So just little things. I've had that happen before where an agent told me, no, this is a townhouse. And I said, I understand what you're saying, but they have it licensed as a condo. So it has to follow Fannie Mae condo rules. That's just how it is. And FHA, not that anybody probably watching this podcast would even care about FHA because they don't do investment, but our area has one condo that is FHA approved. That's it.
Wow, that's unbelievable.
Yeah, that really is. I guess my next question is, are you doing like pre-approval? Because you're saying do as much as you can beforehand, right? So are you guys doing some sort of pre-approval letter? Would you recommend that? Can you even do a pre-approval letter on these non-traditional financing type things? How do I know if I'm going to be able to qualify for the loan before I go and put the offer in on my property?
That is what it is. It's a pre-approval. Even on the out-of-the-box loans, like with the ones that Melissa and I did, they were through a brokered product. So I went directly to that broker with her information and said, you know, I need a pre-approval. Make sure that you can do this loan. They gave me an estimate on what the interest rate would be. And they also said, yep, we'll do it. Here's what the parameters look like. So make sure you get all this stuff. And they do have different types of loans. So it could be a 24-month bank statement loan where you need all 24 months of the same account. You can't have money moving back and forth between two accounts and say, oh, I want to use income from both of these accounts. It can only be one account that income is calculated from. Or it could be a 12-month bank statement. Same thing though. Money moving around a lot is not good. Cash money, this is the only time, a loan is the only time that cash is not king. Yeah. Okay, you got to have a paycheck or something to show where that money came from.
Right. When you talk about laundering money or something, right? That's what.
Yeah, exactly.
That's why they have to do it.
Yeah, they're like, I just, sold some illegal stuff. Here's $5,000 for this house.
Like, I can't do it.
Nope.
Yeah.
Mattress money does not work.
One of the things that you just mentioned briefly was it was a brokered product. Can you kind of talk about that for some of our listeners? What's the difference between, or what is it? There's brokered products and then there's the traditional products. Can you talk about that and kind of how they're used and what exactly that means?
Yes. So if it's in-house, that's usually going to be your normal Fannie, Freddie, FHA, VA, USDA, those types of loans that are warrantable by some of the government agencies. When we talk about brokered products, it just means that we go through a company who doesn't work on the front end like we do. They only deal with the lender themselves. So there has to be a middleman, and that would be who I would be in this case, to act as a liaison between the borrower and the broker. So they don't ever communicate directly. It can be a little bit tiresome because playing middleman is never fun, and you have to go back and forth between the broker and the borrower and say, okay, this is what the broker said. Okay, this is what the borrower said. And it gets, it gets a little bit tiresome, but nowadays with mortgages, everything is tiresome. I joke with people after they send me everything. I'm like, all right, go ahead and send me your DNA sample as well, and we'll get things moving. But a broker is just an added outlet. We have several of them that we used, but it's just, one more group or lender that will give us more availability to help more people get homes.
And when you say lender, are you talking about a financial institution? Are you talking about hedge funds? Are you talking about your rich old grandpa that lends his money to these things? What exactly does that mean?
A financial institution. I mean, it is different than a bank. It is not the same as bank. We do not hold deposits. We don't have people that have accounts that can come in and take money out and things like that. It's just more of, we have investors as a lender. We have investors that give us basically a amount, that we can lend out. And once we do that amount, we sell them on the secondary market. Which means that just because you close with Acopia, and this is pretty much all lenders, does not mean that they will be servicing your loan. So Wells Fargo could service it, Bank of America, PennyMac, Caliber. I mean, there's tons of different places out there. I had one from a different company, and I just talked to them because they're doing a refinance right now with me, and theirs has been sold 3 times in 2 years. So it can get moved around quite a bit, but lenders are more of a financial institution that specifically deals with mortgages.
Yeah. What's the benefit for the financial institution of getting rid of that loan? Why does Acopia get rid of that loan? And what's the benefit to you guys? And then what's the benefit of one of these other financial institutions acquiring that mortgage? Can you talk about that, or is that a little outside of?
A little over my pay grade, but I can kind of touch on it. So for Acopia, it makes room for more loans. Mm-hmm. So obviously continuing to do more volume. And it's almost like selling anything, really. So if you're a fashion designer and you're selling your clothes, right? Well, somebody buys your clothes, and then they're like, you know what? I like this new style that comes out. So I'm going to sell my clothes to somebody else. And then I'm going to take that money and go get some more clothes. So it's just a different way to move your money around and keep being able to bring in new loans. Because if you only have so much money to work with, you only have so many loans you can do. If you're constantly buying and selling, then you always have room to do more. Because I would hate to get a phone call and say, hey, Kayla, we've hit our cap. You can't do any more loans. It's not.
No, absolutely.
Similar to why we like private money.
Yeah.
Same reason, because we can only do so much. It's so limiting. But it's really the same principle.
Yep.
I guess then my next series of questions is, why would I want to go to a mortgage loan advisor or a mortgage lender as opposed to just my, I bank with Bank of America or USAA and go and talk to them and look for loans that way? What is the pros or cons of choosing a regular bank or coming to a company like you guys?
Well, I don't want to ever speak ill of any other institution.
Yeah, well, of course.
So I'll just say why Acopia or a lender like Acopia is usually better. Most of the time, we are going to close faster. So 30 days or less is really what I'm averaging right now. I actually have three that closed in the last 20 days that were clear to close in 2 weeks. So, I mean, that's quick. As Melissa knows, with our last out of the box type loan, I think we were clear to close in 3 weeks, and that's huge. But we knew what they wanted. This was the third one with them that Melissa was doing. We knew exactly what we wanted. I feel like I'm kind of like the guru at that right now, because Melissa decided to be my guinea pig. But, the biggest thing just is that we do everything in-house. We have little to no overlays. One of the only overlays that we have is our credit scores. Mm-hmm. FHA does allow a much lower credit score. But again, most people that are listening to this, they're not looking to go FHA. So if they're looking for conventional or investment, they need to have good credit either way.
Right.
So a lender like myself, we're usually going to get things done faster. We have more opportunities because we do broker products. If you go to your local bank, what they've got is what they got. They probably are not doing anything outside of what they have. And it's, all or nothing. You either work or you don't. And if you don't, they're moving on to the next one. And I actually get a lot of people that have been dealing with their local bank. I had one close actually just last month. Military was moving from Alaska, got stationed here in Panama City, had gone to one of those banks you just mentioned, but I won't say which one. And they had only approved him for $220, and I approved him for $280. And they had closed last month, and they are so excited. They haven't even got here yet. They haven't seen the house in person. They're still on their way from Alaska. But yes, right. It's just the little things that I think a lot of lenders just take a little bit extra time and really dig into a file, or they just don't have the overlays that a lot of banks have. Banks honestly deal a lot with the secondary market and buying and selling loans that have already been written versus doing them up front.
Right.
In my experience.
Yeah, that kind of hits my experience also, is that if you don't fit the exact checklist, and a lot of times the people at the banks are not taught or not experienced enough to go into, well, look at all these different loan products that are available, or maybe their hands are just tied and they can't. And that's been my experience why a mortgage lender or mortgage broker is better than the traditional banks. Especially if you're not talking about your own owner-occupied house.
Yes, 100%. And I have places that I'm always sending to the powers that be in Acopia. They messed up and gave me their cell phone numbers a while ago. So I'm always looking for more products that can help the people that I lend to. And that's, I mean, condotel, that's whatever it is, investors. I'm always looking at other brokers. I have a group that I'm in with thousands of other people in the same position as myself. And we are always trading secrets back and forth or running scenarios by each other. And it's just a good tool and a good resource because you're getting information from the people that do the same thing, and they know the struggles that you can have being on this side. You know, you deal with all the tough conversations, and if something doesn't go right after you've told someone you can do something, man, that's on you.
And that's a recurring theme, guys. You know, Kayla brings up a great point there is, again, it's going to come down to relationships and networking. So if you're listening, write that one down. Well, Kayla, you know, kind of switching gears just a little bit and wrapping up here. Is there any one last tidbit you want to give investor that they need to know about what you do?
My last tidbit would be, thank you, Melissa, for not buying your new car before we did the last loan. So nobody be in the middle of a loan and buy a very nice, big, beautiful vehicle. Always, always, always talk to your mortgage loan advisor before you do something. If your great grandfather is giving you $100,000 and you're going to buy a $500,000 investment, put all 100,000 of it down, and he's got to dig it up from his backyard, please talk to your mortgage loan advisor before you go deposit that into the bank, because it makes the process so much harder. And that's when you have to get creative on how you source stuff like that, because it is very different than it used to be. Everything is about what you can prove. Mm-hmm. So on paper, if you can't prove it on paper where you got something from, whether it's income or assets, it's all the same. You've got to be able to source everything. That's the biggest problem, is sourcing everything, especially funds. People have cash here, there, and everywhere, or grandpa, grandma, aunt, uncle all gave them $1,000, and then you see this huge, large deposit for, you know, $6,000, $7,000. You're like, wait a second, what's this for? Like, that's a big thing that happens. So that would be my biggest, you know, instruction, I guess is the best way to put it, to everyone, is just make sure that you're thinking about that stuff up front, because everything's going to go back 2 months on bank statements minimum. They're going to go back 2 years on tax returns. You know, all that stuff is going to get brought up. So they're looking for the skeletons in the closet. So
I guess is what you're saying, that if you're doing a bank statement loan, to deposit all of that cash in less than $10,000 increments 2 years prior to the time you want to buy the house. And yes, if you're doing a regular loan, make sure you have those big lump sums in your account for more than 3 months before you go and apply for the loan. Is that right?
Yep, that's it.
Perfect.
And Kayla, don't let anybody hit your credit.
Right? Yeah. Don't go, like, I see it all the time that somebody will come to me and they're like, well, I almost bought a car last month, so there will be like 17 hits from the car lot, like GM Financial and every bank they've ever used, you know, it's all these hits to the credit. I'm like, all right, well, you got to explain every one of these. So
yeah.
Well, kind of wrapping up then, we'd be remiss if we didn't ask you where you are on your real estate journey. And kind of, I know you and the families have big things coming up this next couple months. Can you tell us about that?
Yeah, so when I was pregnant with my daughter back in 2016, I decided, you know what, I'm going to start my real estate course and I'm going to get my license. And then I did very well with mortgages and had another child. I finished the class and everything, but I never went and took the test. So finally, my 2 years was almost up and I got a reminder, if you don't go take the test, you got to do the whole class over again. So I was like, you know what? I'm going to go take the test.
Good.
So I scheduled it and I went to Tallahassee and I listened to YouTube the whole way about Florida real estate and thankfully passed. They didn't tell me what my score was. So I must have 1 point or so, I guess I got
pass
it.
is a pass.
Exactly. So I am actually a licensed realtor now too. I work with a local real estate company in Panama City, and I don't really intend to do, residential real estate with it. If anything, I'd want to do more commercial, but my intentions with it were because my husband and I would like to be investors as well. And since Hurricane Michael took out our first home, we turned that into a rental property. So it has been rented out since it got fixed last year. Awesome. It took forever, but thankfully it's done and it's been rented. So that's our first rental property. I'm actually working on trying to refinance it into a 10-year loan so that
nice.
When Charlie's 13, it'll be paid off.
Wow. That's awesome.
So that's the plan though. Hopefully maybe I'll be able to, my lottery plan didn't work out, unfortunately. Somebody else won it.
Ours either.
Yeah.
Well, Kayla, we really appreciate your time. We've learned a lot. I've learned a ton this episode, so I'm sure we'll have questions. If people have these kind of questions, where can they reach out to you?
So I work from my beautiful camper, as you guys can tell, that I've been in since after Hurricane Michael, because we're still finishing up our new house, new to us house. But anybody can reach out to me on my cell phone. That's where I do 90% of my business is from my cell phone. My cell phone number, I still have my Georgia number. It's 770-731-9297. And then, of course, I have email, which anybody can reach me there. And that's Sweeny, KSWEENY, at myacopia, myacopia.com.
Awesome. I'll make sure we drop those in the show notes. And we appreciate you, Kayla. Thanks for coming on.
Oh, thank you guys so much for having me.
Awesome. Thank you.
Thank you for listening to the Real Estate Jam.
Thank you.
Thank you. Thank you, thank you, thank you for all you do.
We hope you enjoyed today's episode. For more information and updates, check out our website, shorefrontrestorations.com, or find us on Instagram, Facebook, and LinkedIn at Shorefront Restorations. If you have any questions, feel free to drop us an email at info@shorefrontrestorations.com. See you next episode.